And they are just coming in right now slightly above the expectation of surveyed economists by Bloomberg. 2.123 million individuals filed for jobless claims over the past week. The number that I'm really watching, and this is something a lot of people are going to be analyzing, and that is continuing claims. They came down significantly from the prior week to 21 million from more than 25 million the previous week. My question, John, does this show that the reopening of the economy is actually leading to a reversal with people getting brought back into the labor force?
The data in isolation is absolutely ugly, but you pick up on the key point for market participants. What's the direction of travel, Lisa? And Tom, it's about that sequential month-on-month improvement that we're about to see in the next several months. June, better than May. July, better than June. August, better than July. You want to see more of that in the months to come, and we're seeing just a little hint of it on the screen this morning.
Yeah. Well, I like the phrase hint, John. I'm looking at the Bloomberg here, folks. This is outstanding, by the way. For those of you on radio, I'm showing it on TV. It's real simple. It's a Bloomberg terminal on an iPhone, and all I can tell you is they got it right. John, futures up 2, Dow futures up 144, and the VIX floating at a 28.25. I would suggest it's an economic report that the market is at least comfortable with. What do you think?
And expected. I would agree with you as well, Tom. Let's bring in our guest this morning. Steve Ricchiuto of Mizuho will be weighing in on the situation. Steve, your first take, please, on the data in America.
Been rolling through in the last minute or so is exactly correct. What you're seeing is expectations of declines being outpaced, or I should say underreported. So basically the expectations are much weaker than the actual data is coming in. And it's not just the continuing claims drop, it's also in the durable goods report, and more importantly in the shipments of non-defense, non-aircraft capital goods, which were expected to be down 12.2, coming in at down only 5.4%. It's this kind of expectation being ahead of what's actually happening in the economy, which I think will be the next phase as people begin looking towards the recovery phase of this expansion rather than worrying about how bad was the second quarter.